Hello everyone, this is Matthew Frailey with BreakpointTrades.com. Founded it back in 2003, 21 years ago, to provide advanced technical analysis, market commentary, trade ideas, and of course my passion, mechanical trading systems, such as our 21 SPY and ES mean reversion systems, and of course our latest KISS systems. Okay, let's go and get started with today's newsletter update on the market. In case you're wondering, I still haven't hooked my webcam back up, so you don't get to see me, but it's not really like that adds any value to the newsletters anyway. So this is our backend recorder for our website subscription service. If you're on YouTube, please consider subscribing. You get so much more with our subscription. You get 5 newsletters a week, not just a couple of YouTube videos a week. You get dozens of actionable trade ideas. You get alerts to our mechanical systems. We have a community, great place. A lot of our subscribers have been here for 10 and some have been here for 15 and almost 20 years, which is humbling to me, quite honestly. Okay, so let's get this puppy started. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, June 26th newsletter. Tonight's newsletter, as you can see, divided into 5 major sections. Same theme as I always keep, where we discuss the general markets, look at a few indicators, a few sectors, cryptocurrencies, US dollar, commodities, precious metals, and of course recent trade ideas. I didn't add any new trade setups tonight. We'll just go over some recent setups that we've had. Anyway, as far as the market, like I said, we're in the summer doldrums. Nothing has changed. We continue to have this relentless uptrend. We have the narrowest range market basically in history. You have, I think on the S&P 500, is it 10 stocks that account for 35% of it, which is just insane to me. But it is what it is. We follow the trend. Our KISS systems follow the trend. That's what they're great at doing. And but that said, this week we had a down day on Monday and an up day the last couple days. That said, while today the S&P and Qs were up, and the Dow and Russell were down, it was actually a negative breath day. Okay, because the majority of the market sectors, we followed 21 market sectors, were down. Okay, so negative breath. And actually in after hours, ES futures, that's S&P 500 futures, are down about 20 points. I know Micron today came out with earnings and they gapped down on that after hours. But that said, I mean, the market maybe needs a rest. Unless we get a rally right from here, I could see this bounce we've had this week being some sort of lower high wave B, and then we need another move down in a wave C. There's a couple open gaps that could be targets. I still think precious metals, they're holding in here, but I still think gold is vulnerable in particular. And so it wouldn't be surprised if that had a meltdown into that next big support area. I would welcome that, because to me that would be a fantastic buying opportunity. Remember, gold and silver are in bull markets now, but again, they may need to be worked off a little more, which I would welcome. Anyway, let's get started. Look at things. So first off, look at some of the KISS stuff. So image number 2 is an image from the KISS tables. This is the BPT basket. All right, today we had new smart trailing stops generated on Apple. Smart trailing stop moves up to 202. Trades up about 13.5% currently. Amazon, we had a new smart trailing stop as well. Trade's only up about 3.3%, but the last trade it made 34.7%. The Dow, we had a new smart trailing stop. Tesla, we also had a new smart trailing stop. And you can see the other things that are open currently. Yesterday, for example, Google, there was a new smart trailing stop, and that trades up 24.1%. Next. Image number 3, here's Amazon. Again, this is the thing about the market, guys. What has been leading the market? It's all these, just a few of these big cap FANG type stocks. So Amazon breaking out through this resistance today, looks good. It's been on our watch list. Here is Amazon on the KISS tables. So you can see on the KISS tables, Amazon, it caught an amazing trade from early last November all the way until April, and it went long again there in, let's see, went long in May, We had a pullback, but never hit that smart trailing stop, and it's still in the trade. Current stop's up around almost about 182. Okay. Image number 5 here is Google. This broke out yesterday, as I said. Now this is kind of wedging up here. Look at the MACD. MACD did cross, but you do have a pretty good divergence at the moment. So if the market does have a pullback, this could be vulnerable, but it's obviously still uptrending for now. Let's look at the KISS system. Here's the KISS system on Google from the tables. On the KISS system, it went long on March 18th, so several months ago, and it's been methodically raising its stop. Yesterday, it raised its stop to 173.90. Trades up about 24%. So these are some great ideas, guys. Again, this KISS system's on the website. They've been live for about a year and a half. We made them live, I think, last January in 2023. So, those of you who've been here following it, if you've been following these KISS systems, you've been killing it. Not all the trades are winners, but the beauty about the KISS systems is on their entries, you have your risk defined. And that's the problem with today. A lot of people don't have a plan. They buy a stock and they don't set a stop. They don't have an exit plan, so they buy in hope. And when the market's melting up, they do good. But times change, and sometimes you can get burned. The KISS system gives you that risk, gives you that exit plan, and your risk defined initially, and tries to keep you in the trends. Okay. Next, moving back to the general market newsletter, item number 7. Here's the index sector table, what transpired today and this week. So you can see on the major indexes, they were all up, save for the Russell, which was down 0.25%. That said, these indexes being up, I mean, look at the 21 market sectors. The vast majority were down here. In fact, the up sectors, 1, 2, 3, 4, 5 sectors were up out of the 21 only. So quite negative breath there. For the week, it's about a 50-50 mix here. Transports had a nice day today. Remember that we've had long ideas in the transports. I discussed this on the weekend newsletter video. Remember, FedEx was in my newsletter for the transports. Had a hell of a move the other day. I know one of our subscribers were in that at least. Congrats on that. U.S. currencies, U.S. dollar's been strong, up 0.5% today. It's up 0.25% for the week. Bitcoin's been weak here lately. It's trading in a range. To me, it looks a little vulnerable. Bitcoin, to me, is going to go where the market does. If the market decides to have a pullback correction here, I think Bitcoin will as well. And commodities here, the index was up 0.17%. Again, kind of a mixed bag here. Some things were up. Crude oil up slightly. Uranium up. Natural gas had a big pullback, down 4%. Same for agriculture, corn, coffee. So most of these commodities are actually down. And precious metals, gold was down 0.75%, while silver was up. GDX, the miners, were down as well. Again, this area is kind of vulnerable. The bulls need to defend it, otherwise we could see another flush down, which again I would welcome, as I stated. As far as the bond market, we continue to have move up in the treasury markets, 10-year, 30-year treasury yields. Next, item number 8 shows the economic news calendar. Tomorrow being Thursday, we have tons of news from, initial jobless claims, GDP third estimate. They're always adjusting that crap. Continuing claims, durable goods. Of course, Friday, remember, we have PCE, core PCE, Chicago PMI, so a lot of inflation data. So let's see how the market reacts to that. Okay, let's go and jump to these charts, get through this quickly. So first chart below, item number 9, is the snapshot of the 5 key major indexes, which is simple Bollinger Bands. Again, as you know, the Dow has been lagging essentially for the last 3 months, going sideways, while the S&P and NASDAQ have been making new highs. So we've pulled back from last week. We've bounced so far around the 9 EMA, but again, we haven't taken out that last high. It's still possible we could put on a lower high here and have another move down. Maybe to the middle Bollinger Band, something like that. We'll see what happens tomorrow. Russell, of course, has been lagging, My thought, though, guys, is that sometime this year we're going to see the Russell come roaring back. So I'm watching this for an eventual trigger. I don't see one yet. Next, let's look at the KISS systems. So here's image number 10. This is the daily KISS trend system for the S&P. Again, no new smart trailing stops. The stop is around 52.95. System, remember, had a heck of a trade from October 31st till early April. Then it got back long early May, and it's been raising its stop since. We had a DeMark 9-13 combo last week, so we pulled back a little bit from that logically. Again, we're still way above the ATRs, etc. The moving average ribbon, like I said, great guide. You could see that pinch we had into early June, late May. That was a great buying opportunity. Usually that first pinch squeeze is an excellent buying opportunity. That's why I love the moving average ribbon. It's a very good visual guide. And I will say that the ribbon is kind of wide at the moment, so that's why it wouldn't also shock me if we have a little pullback here to work that off some. Another thing, guys, I want to discuss, if you look at this chart, I added a couple more lines here. So right now, this here is the daily ATR, average true range indicator. So I added a weekly, that's this thin green, and I also added a thin red one for the weekly. The reason why is because we can see where the weekly ATR is on the daily. So if you look here, for example, on that correction we had in April, price came close to the weekly ATR and bounced right off of it. So when we were there, and if we saw that visually, we could have noted that, hey, this could be a major support, and it was. Let me show you another example. So here's the S&P KISS system back in 2022. Remember that bear market? First off, you can see the KISS system doing its job. It was long for a couple times during 2022, but it mostly stayed out. It caught a couple of those little uptrend bounces and got out. But you can see that rally from July into August of 2022. Remember that formed a big lower high? Well, notice how price rallied right into that weekly ATR. That's the red line here. It stalled right there. You also have the 200-day moving average. Everything just lined up. So it's a really good visual to have on the KISS charts just to see where that's at, because it can be important support or resistance. Okay, so that's what that is if you were wondering. Let's move on. Image number 12, here's the 4 time frames with our indicators. So here's the daily S&P up here. Again, we had a DeMark 9-13 combo, little pullback late last week. Into Monday, bounce the last couple days. We're above the ATR in all these time frames. We have a ATR, we have a cycle support here on the 130-minute. That's one hope for the bulls here, is maybe this is a little wave 4 and we get another move up in a 5. We'll see. We also have the support cycle here. But again, it's going to depend on the market, what it does tomorrow, and of course on Friday. Okay. Futures are down this evening. Obviously that can change. 20 points these days, since the S&P 500 is so high, is really not that much. 20 points used to be pretty big, years ago when the S&P was much lower prices. Next, number 13, here's the weekly. Again, so far, S&P's up 0.25% for the week. The one thing we are monitoring, like I said, there's a big weekly MACD divergence, RSI divergence building. No change in the trend yet, of course. Chart number 14, here's the daily S&P with one of our preferred counts. Again, this nested 1, 2, 1, 2. So we're favoring that as maybe a wave 3 of 5. We're working on a wave 4, or maybe the 4 could be shifted over here. And then we get a new high in a wave 5, maybe sometime in July, later July. The alternate view would be you have an alt 5 here, but we have that as an alternative because that's not our favored view. So again, nothing's changed here, guys, from what I discussed on the weekend. Chart number 15, here's a 60-minute chart. You can see the sideways action so far this week. Again, this could go either way. I mean, this could be setting up a 4th wave consolidation. You can see your moving average ribbon is really pinched. That means energy is built up here. So we could easily rally to another high here and set up some active divergence. Or this could form a lower high and then get a flush down. Like I said, futures are down tonight. And a target on a flush down to me would be this gap. There's an open gap from mid-June. These open gaps in the cash index like to be magnets, so that's something to be aware of. We'll see what happens tomorrow and Friday, but this sideways action is eventually going to resolve itself. Chart 16, here's the 15-minute chart. So far, we're just chopping around between supply and demand. So, next. Chart 17, here's the daily KISS system for the Qs. Again, no new smart trailing stops here either. Still 467.25. We had it to mark 9 a week ago, which so far has marked a high. Again, it's possible that we could form a lower high here on the Qs, you know, like a wave B, then come down again in a C. The Qs look a little more precarious short-term to me than the S&P. Look how wide the moving average ribbon is here. Yes, it's pulled back a little bit, but it's still pretty wide here. Chart 18, here's the 4 time frames. Again, daily up here, where we pull back from them to mark 9. Now we're below the ATR on the half day, which is now resistance. That could support that wave B lower high. We're below the ATR on the 130-minute and the 78-minute. Okay, so unlike the S&P, so you can see it's weaker than that. And the Qs have been leading, so be aware of that. Chart 19, here's the daily Qs, again with the same wave count essentially we have on the S&P. So again, it's still possible we're working on a wave 4 here. So if you can visualize this, a move down in a wave A, move up in a B, lower high, and then a move down in a C. So that's possible. There's an open gap here, so those like to be filled. So on another move down, filling this gap would be my target. Chart 20, here's a 2-hour view. Again, really just kind of chopping around here. We did bounce around that 50 EMA on Monday. Chart 21, 2-hour view. Again, really no changes from what I showed you on the weekend. Again, you can see the move down, move up. You know, the short-term bearish view would be as an A, B, lower high, then a C down, maybe to fill this gap right there. Chart 22, 30-minute chart. We did bounce off a little demand zone there on Monday. But again, we still have not made it back to the high, so we could still form a lower high, and there's an open gap down here. Chart 23, here's a 15-minute chart. So far, Steve was drawing 5 waves here. This is something to monitor. All right, moving on. Chart 24, here's IWM small caps. Again, down 0.25% today. They continue to underperform. They are in this demand zone, just kind of chopping around here. Again, like I said, small caps to me have the most potential to rally if we start seeing some sector rotation. They have lagged this year, as you know. So this is an area I'm going to keep an eye on because, again, if it were to go up in this wave 5, which we have, that would be a heck of a percentage move. It would have a bigger, faster percentage move up than the NASDAQ and S&P would if they continue their uptrends. But I need to see a trigger. Don't have one yet. It's just kind of chopping around. All right, guys, that does it for the indexes. Let's move on. Chart 25, here's the VIX. Nice clean chart of the VIX. I did add Bollinger Bands on here. Hopefully Steve's okay with that. I know he likes to keep this clean, but I made the Bollinger Bands really light so they don't really stand out. We like to see when it closes outside the Bollinger Bands. We're obviously not outside the bands, but we are back into this demand zone. So that's an area where this could try to bounce again, would support a market pullback. Chart 26, there's a 15-minute chart of the VIX. You can see we've pulled down into, first off, there was an open gap here, which we filled. That was a magnet. But this down in here, well, there's also kind of an open gap here, but there's also demand zone into here. Chart 27, here's the S&P versus high yield corporate. Again, the two tend to move together very well. They're very correlated, but we look for divergences, just like you had in late July of 2023 before that fall correction, and of course late October 2023 during that major bottom. Well, currently we still have a divergence here with high yield corporate having a lower high, S&P at a higher high. Again, this could be blown out if high yield corporate goes rallies here and makes a new high. But for now it's there, and it is something to be a little bit cautious of. Moving on, chart 28, here's TLT 20-year bonds pulling back a little bit. Remember, it broke out of their channel a few weeks back tested it as support. Chart 29, here's the 10-year treasury yield. Again, rates were up today. Okay, bouncing off that lower channel line. Chart 30, here's the weekly view of the rates. You get the 10-year treasury yield. It's kind of in a weekly coil pattern setting up. Moving on to some of the market sectors, we'll just look at a few of these puppies. Here's XLK Technology. Again, little bounce back the last couple days, but this definitely has a conspicuous kind of like an A, B, C down. I need to add my drawing program back here. You've seen me draw lines on the video before. I don't have that on this computer since this is a newer computer. But you can see my point. It wouldn't shock me if this makes a lower high and comes down again. Notice also there's an open gap here. Okay, it would be a magnet down around 220. Chart 32, semiconductor, same deal. It came down nicely to the 20-day moving average, bounced a little bit. Chart 33, here's NVIDIA. So NVIDIA, it didn't quite make it to the demand zone and bounced. But again, you can see how this kind of has a wave B look to it, maybe form a lower high. So I would be cautious on this, guys. I know everyone wants to own NVIDIA because of all the AI. But, you know, it's not just going to go straight up all the time. If this is a wave B, I think it pulls back down into this, gets into this demand zone, and that would be your area to look to buy. Next, chart 34, here's utilities. Remember, they've been underperforming since March, as I discussed. I discussed this on the weekend. I said this area actually looked pretty good. Now, it's still in the pattern here, but we had some nice stocks that triggered. Let's take a look at those. Chart 35, FedEx. So this was on our watch list for last week. I discussed it on the weekend newsletter video. So you could have bought this, and boom, if you held it into earnings, you were greatly rewarded today. Look at that move. This is a breakaway gap on monster volume. Here's the other one, Transport EXPD. Kind of has a cup and handle look to it. Now it hasn't run away here. It's kind of chopping around, but it looks okay. Chart 37, home builders. This area looks, it's still kind of in this coil pattern, but man, it looks weak. If it loses this area, I think it quickly flushes to the 200-day moving average. The energy area, which had a bounce this week, pulling back today a little bit. We'll see what it does tomorrow. Nice rally off that 200-day moving average, of course, over a week ago. Chart 39, some of those energy names, ExxonMobil, again, nice move. This one still held up pretty well today. It's out of the channel. Chart 40, PSX, Phillips 66. I liked this one because it was wedging with a pretty obvious MACD divergence here and RSI divergence. Chart 41, oil services. This is the weekly chart. Remember I talked about this? This uptrend line going back to 2020, so it was a major long-term support. To me, it was a low-risk area to take it last week. Apologize, I had to pause. I had a coughing fit. Anyway, but nice rally off that long-term support. So again, if you're a longer-term player, I think you could pretty be long and just have a stop below that lower trend line. My long-term target would be filling this thin zone up here. We're a long way away from that. Moving on to commodities, chart 2042. Here's DBC. Again, it's pretty flat this week. Remember, it's still in this multi-year coil pattern. Chart 43, here's the daily. It's chopping around. Remember, a few weeks ago it bounced off that demand zone, but right now it's chopping around. Chart 44, crude oil. Again, nice rally off the demand zone. There's a supply zone right here. Again, we love these supply and demand zones, guys. Just look at this. We had the supply zone where we stalled back in April. We had a demand zone back here where we rallied off in December. We had a demand zone here that we rallied off in early June. These supply and demand zones are extremely effective. It's very popular now. If you go look at YouTube and TradingView, a lot of professional traders use these now instead of just simple horizontal resistance and support trend lines. These zones tend to be very effective where you look for triggers. Anyway, this is your supply zone up here, resistance area. Chart 45, UNG, natural gas, big pullback today, down 3.6%. And you can see this 200-day moving average, that's why I highlighted it with the box. That's where price has been struggling the last 3 times. In fact, really the last 4 times. I didn't see this. You got a box here you could put. So that's been capping price, that 200-day moving average. Now, maybe it's a good buy around that 50-day moving average there in red. So I'll be watching that area maybe for a trigger when it gets back to there. It doesn't have to stop there, but that could be a logical place for it to find some support and be a low risk long. Chart 46, copper down 1.7% this week. Again, it had a hell of a rally this year out of that weekly coil. Got overextended. RSI's got sky high, over 90%. And it's come back nicely. Chart 47, here's the daily. Again, what I showed is that once it lost that 50-day moving average, it became resistance. So continues to correct here. Economy is slowing, guys. Despite what the stock market looks like, the economy is slowing under the surface. Okay. Here's DBA. That's been weak here as well. A couple dojis here now. Next. Chart 49, Bitcoin. Again, Bitcoin's just kind of chopping around in this pattern. So this is your big support, guys, down around here, down around this 5650 area, 56,050. So again, we're just between support and resistance. We could easily rally up here. Now, if we lose this, I think we get a flush down to here, and well, on a real flush, even down to here. But for now, we're still in the pattern. Chart 50, Wolf. This is a crypto mining stock. It's had a heck of a rally since we had it on our watch list as a trigger back here. Pulling back a little bit today. There's some divergence. Moving average ribbon very wide now. May need to be worked off. Chart 51, Mara, usually is a pretty good trader. It's a crypto miner as well. It's in a coil pattern here, so energy is building. Chart 52, BITI, that's the inverse short ETF for Bitcoin. And this thing has a nice base to it. Again, it's going to depend on what Bitcoin does, but this does have a nice base. So one to watch. If it can clear this resistance, I think it makes it up to this supply zone around 10 to 10.5. Would be a good percentage move. Chart 53, US dollar, up 0.6% this week in this weekly coil pattern. The dollar's been strong, as you know. So this is on the verge of a breakout. If it breaks out here, of course, that'll cause maybe that correction in the precious metals that I'm looking for. So let's move to precious metals. Here's gold down 0.75% today. Still hanging on to this weak support, but to me it looks weak. Look at your moving average ribbon. It's pinched. It's trying to curl down there a little bit. On a breakdown, I'm targeting this area, this demand zone. Remember, the 200-day moving average is down here. Remember, this is working higher. So if this breaks down and price gets into here, I think the moving average will catch up. And again, I think that would be a hell of a buy opportunity down in here if we get a move to there. Chart 55, here's GLD, the gold ETF. Again, you could see the same thing here. The demand zone down here. You also have an uptrend line here. Notice how everything lines up to a big support down here. This isn't a head and shoulder pattern, but you can kind of see it's kind of a head and shoulder look to it. So again, guys, if it breaks down here, I'm targeting this area. Chart 56, GLL, that's the double inverse short for gold. Again, this has been on my watch list. Nice move up today. It's in this resistance area. Again, if it can clear this, I think it pops up into here. So I'm long this. Chart 57, again, on a correction on gold, guys. Remember, to me, gold is in a bull market. So it's fine. To me, it's just a big wave 4. So once that would be over, I think gold goes up in a new highs in wave 5. But gold could come down to this demand zone, down into this area. Chart 58, here's silver, down 1.2% today. Apologize, I had to pause. I had a coughing fit. So anyway, this weekly oil services, like I said, beautiful chart. I think you could be long here at the stop below the lower trend line. And my target area is eventually filling this thin zone. Next. Moving on to commodities, chart 42, DBC. This is the weekly. It's pretty flat for the week. Remember, it's been consolidated in this multi-year coil pattern. Chart 43, here's the daily. A few weeks ago, DBC bounced off the demand zone. Right now, it's just chopping around. Chart 44, crude oil. Again, nice rally off the demand zone in early July. It's now approaching a supply zone. Remember, guys, my discussion. These supply and demand zones are awesome. They're so much better than horizontal resistance and support lines that folks used to do. If you look on YouTube and TradingView, these have gotten really popular. A lot of professional traders use them now. They're very effective. You know, you get into these zones, you look for buy triggers or sell triggers. But anyway, so you can see how nicely price rallied off the demand zone in December that we had in place. Price rallied off the demand zone in February, sold off in the supply zone in April, bounced off the demand zone again. I mean, just very effective. Learn how to spot these and utilize them. Next, chart 45, UNG, natural gas, pulling back. Notice how the rallies have been stalling around the 200-day moving average. In fact, it stalled back here as well. I put a couple boxes to really illustrate that, but it also stalled back here in October. So clearly a big resistance area. Now, I am looking for a potential buy around this 50-day moving average here. That could be a potential support. Chart 46, copper, weekly view down 1.7%. Again, heck of a correction. Remember, it had a big rally earlier this year out of that weekly coil. Got extended. RSI got up to over 90%. It was very extended. It's pulled back pretty nicely. Chart 47, here's the daily. Remember, I talked about this. Moving average ribbon got very wide there as well at the top. It was kind of parabolic. It needed to be worked off. And then price, once it lost that 50-day moving average there, then it became resistance. Okay, so still working lower. Chart 48, DBA, agriculture, also been working lower as well. It's kind of back into this little demand zone, which acted as support last time. Moving on to crypto, here's Bitcoin. Bitcoin's still stuck in this range, horizontal range. Major supports 56,500. Major resistance up here. We'll see what this does. If it loses this support, you got some demand zones down here that could be a target. Chart 50, Wolf. This is a crypto stock. We've had it on our watch list. Heck of a rally from early June when it broke the trend line. Big move yesterday. Down today. It is some divergence up here. Wide moving average ribbon, so this may need to work off. Chart 51, Mara, a crypto mining stock. It's in a coil pattern. One to monitor. Energy is building. And should Bitcoin have a correction pullback? I think Bitcoin is essentially going to follow the market. It's kind of like a leveraged NASDAQ essentially. Anyway, BITI is the inverse ETF. You have a nice base here, and if it could break out of here, my first target would be the supply zone up here to 10 to 10.5. I own a little bit of this right now. Moving on, chart 53, US dollar weekly view up 0.6% for the week. Remember, been shown in this coil. Hasn't broken out of the coil, but it looks pretty good. If this were to break out, I think that would cause the correction in precious metals that I'm looking for. So let's take a look at that. Chart 54, here's gold. Still hanging on the support area. Tested it today, but it looks vulnerable here, guys. If it breaks this area, I think it flushes down to this demand zone. And again, if you can visualize this and see the 200-day moving average, so if price were to come down here, I think the 200-day moving average will catch up to the demand zone. So it would be a logical area. I'll be a big buyer of gold if it gets into there. Notice your moving average ribbon is pinched. It's starting to curl down a bit. Again, if that dollar rallies, that could be a trigger or catalyst. Chart 55, GLD, that's the tradable ETF, has a similar look as you can see. Kind of a head and shoulder look. It's not technically a head and shoulder, but you can see kind of has that look. And here you can see the demand zone down here. If the support is lost, you can see also this nice uptrend line. A lot of things line up there. Chart 56, GLL, that's a way to play it. A pullback in gold. I own a little bit of this right now. I will add to it if it can clear this. If it can clear this resistance zone, I think it makes it up to this supply zone. Would be a good trade. Again, guys, don't get me wrong. Gold longer term is in a bull market. Here's the weekly. Gold's down 0.8% for the week. But I view this pullback, if we get that pullback, is a wave 4. I think that last high was a wave 5. And then I think we get a new move if it gets down into here to a new high in a wave 5. Chart 58, silver, down 1.2% this week. Remember, silver's had a really nice move this year. Chart 59, silver on the daily, still in this little downtrend channel. Still technically right around this 50-day moving average, which is big support. Chart 60, GDX, still hanging in this channel, still holding on for now. Chart 61, Dust, that's the inverse ETF for the miners. So still has this inverse head and shoulder look to it. I own a little bit of this, but it hasn't technically broken out of the pattern. And guys, finally, let's look at some of these trade ideas. So here's GRND. Steve had it on his watch list yesterday. If you're on YouTube, you didn't see that. So if you're a subscriber to Breakpoint Trade, you haven't gotten this idea. This gapped up today, monster volume, a breakaway gap. I bought the gap. I bought the gap right after the open. And it ended up being a nice trade. Chart 66, Carnival Cruises. Big move yesterday on earnings. Nice higher low. Follow through. This chart actually looks really good. Look at the volume. Chart 64, here's the weekly. The weekly is breaking out of a really nice coil pattern. Look at this. So this thing could run if it wanted to, based on this weekly. Chart 65, Rivian. Big gap today on news. Remember, it came into this demand zone. This was in a good area to buy it. Now, it was off the highs today. You can see the black candle, but a heck of a move. Look at that volume. And you can see this inverse head and shoulder look to it. Rivian, I think, is going to do well and survive, unlike things like Fisker. I'm in the middle of farm country, and we have Rivians here. I'm not in California where you're going to see all these things. So I think it's a good-looking truck. I think it's a good truck. And I think this company will survive. Obviously, there'll be struggles, but nice move here. Chart 66, BKR, been on our watch list. Nice breakout. A little pullback today, but nice move. Chart 67, Tesla. Remember, this was on our watch list on the weekend. Nice move from that trend line. This is a half-day chart, by the way. 195-minute. Chart 68, Qualcomm. Nice pullback from that gravestone doji and MACD divergence. Now, watch that 50-day moving average. I'd be taking profits there. Chart 69, AMT. It's been on my watch list since the weekend. Here I redrew the lower trend line. Now, if it loses this, I'm going to take it off the list, but it's still valid here if it holds this area. Chart 70, AMD, never triggered. It's still in the downtrend channel, so continuing to monitor. Chart 71, CVS. Long idea from the weekend, never triggered, but I'm keeping it here for now to watch. Chart 72, Procter & Gamble, also pulled back. Here added a trend line. If you happen to be long this, I'd put a stop below that trend line or 50-day moving average. Okay. Needs to hold that. Chart 73, MDGL, kind of a cup and handle look to it here. Has not triggered. We'll continue to monitor. Chart 74, Ford. Also posted by one of our subscribers, Morton. It is coiling here. GM, by the way, has been on fire. If you've looked at that stock lately. Chart 75, Triple M in a tight coil pattern here. Going to be breaking up or down here. This could be a long or a short, depending on the break of the direction. Chart 76, Mir, still one to watch. Needs to clear this trend line. Chart 77, Next on our watch list, still is one to watch over that resistance trend line. And finally, chart 78, ADP. One of our subscribers asked me to look at this. Big sell-off today. This thing looks kind of precarious. It's been going sideways. You got a big support open gap here. Now, if it loses that, I think it flushes down. So this is a big critical area, guys. Here's the weekly chart as well. So, all right, guys, that'll do it. Now, a quick check on futures. ES futures are down about 24 points. So they are down nicely. We'll see how they fare tomorrow. And I will see you tomorrow. Take care.